Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's February 19th. Hope you guys got some great upcoming plans for the weekend here. Kind of a light day today. We got basically one item here, which is the Consumer Price Index, also known as the CPI. These are inflationary numbers on the consumer level, so high importance here. So previously, back in December, we had a negative 0.1%, so it contracted a bit, showing some deflationary, and it looked like January was going to be the same, but it came in at nil. Now, when you strip out the food and energy, we get what they call the core CPI, and this is really what they look at as the core between the PCE and the CPI. The CPI they definitely look at, but the PCE is the Fed's favorite gauge, and that's what kind of helps control, determine if they're going to raise rates or not. So they're a little bit different. Right now, there's actually a pretty big spread between the two, about 0.7% difference, and the Fed would like to see it at about 2%, whereas the PCE is currently about 1.4. Now you can look at the core CPI. This one went up and had a pretty big jump. It's actually the largest since 2011. We've had that big of a jump. So in December we had a 0.2% growth increase in the CPI, and in January the forecast was supposed to be at 0.1%, and it jumped all the way up to 0.3%. Right now we're about 2.2 year over year percent in terms of where the inflationary is underneath the consumer price index. So this is something definitely need to try to look into why there's such a big differential between the two gauges here. Stock market's a little mixed right now. Nasdaq is the only one that is currently down, whereas the other two are up a little bit. A lot of it is taking its cue from Nasdaq is actually the one that's up. Nasdaq is up. The other two, S&P and Dow, is currently down. Now, a lot of it is stemming from oversupply of oil concerns, so it kind of dipped under $30 a barrel right now as a concern. So they're kind of going through and finding that that there's more oil out there than they initially thought. Bond market, as a result, from the inflation numbers, if you may or may not know this, inflation is the biggest enemy to bonds, and this is what we're looking at. The mortgage-backed securities are bonds, and it's pulling back because the biggest enemy is inflation. Because what happens is that over time, bonds are over like a 30-year period, and over time, inflation basically erodes that value of that bond over a course of time. So we're down right now about 12 basis points from where we left off yesterday. So as a result, interest rates have worsened a little bit. We did start off higher, but when that came out with the CPI numbers came out, it started moving backwards and retreating a little bit from the highs today. All right, you guys have a wonderful weekend. Thanks so much for watching. So interest rates are kind of crept up a little bit today after a nice little rally yesterday. We were down quite a bit of the day yesterday, and it rallied back. And it looked like we could have had that today, but that CPI kind of scared off the bond market today. All right, you guys have a great day again. Thanks so much for watching. We'll see you guys on Monday. Bye-bye.